Good morning and welcome to the market forecast for Tuesday, July the 13th. I'm John Hoagland. Thanks for trusting me with your time. We've got a lot going on in these markets this morning. We're going to dive right into it. As always, we're looking for accurate context, good risk management, and of course, trying to remain patient, which is going to be challenging for us today. I'm feeling a lot of FOMO out there in the trading world today. We got to be careful, trade what we see, and always look for those opportunities to manage risk. Economic numbers this morning. The CPI numbers came out. Core CPI was expected at 0.4%, came out at 0.9%. Year over year, that 4.9% was expected. It's 5.4% now. Yes, it's a reality. The Red Book number came out. I'm sure nobody's really all that interested in that. It's the inflation number that is affecting markets right now. Equity futures before the number came out were ready to open, steady to mixed after some really good earnings from JP Morgan and Goldman Sachs, as well as PepsiCo and ConAgra, all of those beating expectations right at the beginning of earnings season. We're seeing these markets moving. Yes, I see Murph commenting on the FOMO already. Yeah, it's going to be one of those days. Some bigger opportunities are likely. We're going to see that in the charts and some of the other information that I've gathered for us here this morning. Fed members are disagreeing on reducing asset purchases, citing a potential housing bubble. Of course, we know the CPI number has come out much bigger than expected. The International Energy Agency, the EIA, has warned of significantly tighter energy if OPEC cannot agree on market share allocations between its members. They're still arguing on that. Crude oil in rollover, largely range bound for now, but we're waiting for some new information with regards to what OPEC is going to be doing. So make sure you smash that like button, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. VIX jumping to the upside at 7:30 this morning, up at 1652 last time I checked, a little bit over a 2% jump instantly. Dollar index also higher, 92.56. The 10-year yield, 1.37. No major moves in that regard. As always, I got to say good morning to everybody. I see Theo first in the room. Good morning, Theo. It's always good to see you. You win the prize. The Org, good morning. Stock Trader, good morning. Brian. Raymond, good morning. Bill, good morning. Jerry is awake. Murph, good morning. Boy, you want me up early in the morning, don't you? You'd like to see the market forecast at 7 a.m. Central. Oof. I'll be up really early if we do that, but we do appreciate and we always consider all of the feedback, Murph, so thank you very much for that. Good morning, James, Torres, Laura. Jerry is awake. Value high yesterday of NQ, now all the way through the value low. Jerry is awake. Yes, there it is. Clarence, Zerain, Mike Magallanes, the chef is in the room. Jason, Jim, Tony, feel it too. Yes, that FOMO is going to be very prevalent today. You know, and it's important to. I don't want to pontificate too much, but we've got a lot to look at in these charts this morning. But it's important to remember that FOMO is telling you something, whether it's directionally correct is in question. But you really want to ask yourself before you do anything, especially in emotional and fear-based situations, somewhat like we're seeing now. Is this in my best interest? Give yourself the opportunity to really think about that trade before putting it on. Sometimes it may cost you a little bit, but in the long run, I think making sure that you're cognitive in the decisions you're making and not impulsive will pay off in the long run. All right. Colin, Nico, Tony, I forget where I was. Prophet Eon, good morning. Caesar, Deanna Floyd, good morning. Made a nice profit on that gold move this morning. Very nice. Drones over Texas, good morning. Colin, what do you think about sizing up? If you have a winning strategy, how do you think about going from 5 MES to 1 ES. Well, Colin, this is something that is always a question. And, when we're talking about doubling our risk, we're also talking about the possible decision making changes that are going to come along with that. When we add risk, it becomes a little bit more difficult to make the same changes, to make the same decisions that are that we're used to doing with a certain amount of risk. Adding risk is going to make it more difficult. You don't have to go from 5 micros to 1 mini. You go from 5 micros to 7 micros to 9 micros, then to 1 ES. Work your way through it. It's something that a lot of people ask about, and I'm always suggesting, once you are very, very comfortable in your strategy and it's proving to be profitable over a period of time, then it's start to think about adding risk. But you don't have to double your risk when you're talking about the micros. If you're trading the minis and you're going from 1 to 2, that's doubling your risk. To me, that's the biggest jump in risk a trader should ever take. For me, FOMO equals greed. I'm a greedy son of a gun, absolutely, and that's what it does. I mean, our markets are moving; they are offering us bigger opportunities, and it's very, very tempting to try and just jump in. Yes, Tony, don't be afraid. You can control your risk. That's the whole idea behind being a good risk manager. And you don't have to do anything. Sometimes sitting and waiting and looking for the right opportunity in volatile types of situations. And we've got a little bit of volatility jump here this morning. You may just be doing the right thing by staying out of the market until something really comes to you that says, okay, this is it. This is my opportunity. I've got good risk management. I'm going to wait and I'm going to make sure that I've again got that good risk management. Sometimes if we're waiting for confirmation for a trade, we may cost us a little bit in trade location. But if you're looking for some sort of structure to lean on, it's sometimes a good idea. And no position is a position. So don't be scared. We can control our risk. All right. I've got a little bit of news. Dr. Menaker is not going to be able to join us this Wednesday for market therapy. I'm going to talk to him. Maybe we can get him in the following Wednesday. If not, we'll wait for the next opportunity next month to talk to him. I do have the link for group coaching, which is tomorrow at 1 p.m. Central. Look forward to seeing you there as always. All right. Without wasting too much more time here, I'd like to get in to the charts here. Let me get the daily and crude up as we usually start with. Not a lot going on there, but we're going to be seeing some things going on in some of these other markets. So let's have a look here, starting again with the daily and crude. So it is in rollover. We have to remember that. Rollover tends to make markets remain somewhat range bound. Probabilities are range bound inside this range. Okay, we have an inside extended trading hour range right now, kind of proving the fact that this market is waiting for new information, of course, through rollover and from the EIA and the OPEC. So we're just kind of waiting for information here. We did add 12,000 in open interest overall, losing 32,000 in the August contract, which is the expiring contract. So we're seeing money overall coming into the crude oil contracts with, of course, the crude oil, the August crude losing open interest as it should. So overall, we're seeing some potential more energy coming into the crude market overall, just not necessarily in the August month. So that increase in open interest during rollover does bode for bigger changes later on. Here's the 30-minute chart. Okay, we had some overnight longs. They've since been kind of recovered. Okay, we see that the knee jerk to the downside here basically took us from outside range from opening in in a gap situation to no gap. We've opened in range and value. We're finding kind of recovering off the knee-jerk reaction from the CPI numbers. We're looking at a market that is remaining somewhat short time frame bound. Okay, we've got a naked point of control up here that remains unchecked in regular trading hours. We've got another one down here. We've got some pretty finite extremes of range here for the past few sessions. We got here, there's a weak high yesterday that we checked into overnight. We haven't checked in the regular trading hour session. We've got a kind of a weaker high up here in the overnight highs that are so close together down below. We've got a naked point of control that has yet to be checked, and then of course weekly kickoff low. There's big expectations for the opportunities today. I'm not sure that we're going to be seeing them in crude oil. I'm not a huge fan of jumping into anything too expeditiously, if you will, in crude this morning. Now into the S&Ps. So my early notes went out the window at 7:30. So what we're looking at here is the market is still maintaining upside structure. What I'm kind of bummed out about yesterday is the low volume we put on the new high we put in yesterday during the regular trading hour session, above weekly kickoff high. Even more bummed about the fact that we only added 1,000 contracts in open interest. The money is not necessarily coming in that strong to the upside, at least not yet. Now we've got CPI telling us, hey, there's something else going on in the economy we'd better take an eye on. And we've all been watching for inflation to come into this market. We've been printing so much money. How can we not have some sort of reaction to that? And I think we're starting to see that today in the CPI numbers. So as important as inflationary numbers have been in the past 6 months, I think they're going to get more and more important in the next 6 months. We may be seeing some pretty decent trading opportunities off of that. Okay, so we're basically holding and testing weekly kickoff high, which was 43.60 even. Here's the 30-minute chart. The initial knee jerk to the downside pretty much stopped right at that level, that 43.60 level. It's taken us back into the kind of target-rich area where we were sensing that we would have a lot of fish yesterday. We're still back in that area. We're still testing this level. We've had basically the value area special situation play out to the downside before the open. Now we're below value. If we can hold weekly kickoff high as support, we can get back into value from yesterday. I can see this market recovering back up, and we still have we did not put a new overnight high, all-time high in the market yesterday. Interesting. We did that in the NASDAQ. We did not do that in the S&Ps. So this 4630 to 4360 to 4365 level is going to be somewhat pivotal today. It can chop you up if you are too aggressive in this area. Look for some sort of support. Look for some sort of structure we can lean on. Our overnight low looks like it might be one of those levels. It's pretty close to yesterday's low of the session. The low of the session was rejected and then accepted above that weekly kickoff level of 43.60. We are now attempting to re-accept above 43.60, which could push us even higher, even with the inflationary numbers that just came out. Just looking at what the charts are telling us is what we're talking about here. So into the NASDAQ. Okay, we got another new high in extended trading hours last night. This market is towing the line so well, I don't know what is going to knock it off its pedestal. Lower volume yesterday. We added 400 in open interest on a brand new all-time high. Not that impressive. So now we're looking at what has happened since 7:30 this morning with the market putting in its new all-time high in the overnight session, getting a nice knee jerk to the downside. We've got a naked point of control down here that I've yet to extend, but what are we looking at here? We're looking 1447. We're pretty far away from any of our weekly kickoff numbers. I'm going to be looking for this market, which still remains a market that I believe we need to buy weakness in. I'm looking for the right weakness, and if I can't find it, that's okay. I'll find an opportunity as the day goes on. The market is going to be opening in range and in value, which says, maybe we just need to stay patient, look for our opportunities at previous areas of rejection. Maybe down here near our overnight low could be an interesting opportunity for us. Okay. Gold. Gold is a very interesting market to me these days. It's been increasing in open interest as we've been kind of pushing slowly higher to the upside. We're not really holding volume all that well in gold. However, the fact that we're largely kind of range bound and we added another 11,000 in open interest yesterday tells me that there's some sort of change coming. I believe that change is probably going to be coming at our weekly kickoff low, which was last week's low, and our weekly kickoff high, or perhaps even last week's high. We've got some pretty solid kind of areas of rejection up against last week's high already, even today. This recent balance we are in does seem to have somewhat of an upside hue to it, doesn't it? Take a look at the 30. So the 730 bar opens here, knee jerks to value low from yesterday. We initially had left the opening range at the low of the session. That didn't last very long. Here's the area of interest that I'm thinking. We've got last week's high here. We've got our overnight high here, which is, well, it's actually regular trading hour high. So we've got some pretty solid areas of resistance up here near last week's high that looks like an interesting opportunity for us. And we've got value low from yesterday, which has provided some degree of support. Is this a very strong low? Does this look like rejection to you in the 30-minute time frame? Not really. Not really. The exactness of these lows and the excess at the highs here may be indicating it. We might start to look for opportunities to sell strength to see if we can take out this weak low and look for prices lower. I'm thinking with the open interest increase that we've seen, with the range-bound activity, when we do break out of this range-bound activity, I'm looking at a larger move, but where we've got a lot of work and a lot of space to make up before we are going to be capable of doing just that. Take a look at the euro. Okay, wrestling with weekly kickoff low. We lost 3,600 in open interest yesterday. Very low volume. This market was waiting for some sort of information. We've got lower lows. We've got lower highs. We've got lower lows. It makes sense that we might be putting in another lower low today, doesn't it? Take a look at the 30-minute chart. So we have tested 2 in regular trading hours, 2 points of control that remain unchecked. We are at weekly kickoff low. This is last week's low. This is going to be somewhat of a target-rich environment. We're looking for the market to either accept below this level or reject below this level. This area here will be pivotal as far as continuation to the downside is concerned, if given the opportunity to see it. So the market opens. There is not a gap. The market closed the gap just before the 730 number. Resistance through the previous unchecked naked point of control. Another one here. Are we holding below weekly kickoff low? This does give us the opportunity to limit risk, especially when we have this naked point of control here. You can see the market came up, looked again here at this naked point of control and is now continuing its push to the downside. So some decent opportunities in these markets today. And it's just going to be a matter of trying to stay patient, being in the right place at the right time, managing the risk to stay in the game long enough to get into something good and good and nice and tasty and profitable for us. Fish are going to be hard to find today, but I can see and feel them below the surface of the water. Testing weekly kickoff low in the 10-year right now. We've had very low volume, and we did have a 17,000 contract increase in open interest on this test of weekly kickoff low yesterday. Take a look at the 30. A lot of knee jerking going on. We've now tested to a previous weekly previous naked point of control. Where are we as far as 3307 is weekly kickoff low. I don't know why I haven't put that on here yet. Here we go. So we are again in a similar fashion like the euro, testing weekly kickoff low with the benefit of a naked point of control check. So we've taken a look lower. We seem to be recovering. If we can bring this market back into value and find acceptance, we may spend some time in here. There's going to be some digestion that is going to be involved in the markets today. And, just kind of thinking about economic numbers tomorrow, we've got the beige book that comes out. We also have producer price index final demand, another inflationary number. So we'll be looking forward to that. Retail sales is going to be another one on Friday. The focus is going to be on the inflationary numbers for a while here. As far as Michael, yeah, we got past the ES and the NQ. Just going to take a look for you down here in the 30-minute chart. This target-rich environment that we were looking at yesterday as an important level to find fish, I believe it's still going to be an important level to find fish. 43.60's weekly kickoff low. We've tested to yesterday's low. We've shown some rejection, not a very strong low, however. So we are going to be opening here in just about 5 minutes. If we open below value and reaccept, we could easily bring price back up to the value area high. Settlement yesterday, which I thought I had put on here, is up here. Hang on. 43.7650. 43.7650. And there it is. So, the day kind of started here. We didn't have any overnight inventory. The 7:30 knee jerk to the downside, testing an area of previous fish, kind of rejecting below that weekly kickoff. It's not a very strong low. It doesn't really bother me that much that it's in the overnight session. We're going to open the regular trading hour session in range and in value. Still in balance. So find good trade locations after that. The NASDAQ, one more time for you, Michael. Another all-time high in the overnight session. We know markets don't like that. This market already back through yesterday's area of value, heading back towards settlement and last week's high. Is this market going to continue its march to the upside? Looking at the daily chart here, it has been towing this line so well for so long. I'm not sure if this is going to be enough to derail the equities. It's certainly going to be enough to get some short time frame traders, fear-based traders, FOMO-based traders, thinking they're going to catch the big move to the downside, and then when they all end up getting short, the market has a big tendency to just grind those shorts higher and higher and squeezing them out. So I'm going to be keeping my eye out for that. I'm going to try and stay patient and humble and grateful in my trading today, as always. And That's going to be it. So, again, my apologies, and I know that the good doctor is very sorry he's not going to be able to join us tomorrow. I'll get him back with us as soon as we possibly can. Other than that, looking forward to group coaching tomorrow. I put that link in the chat. Looking forward to seeing all of you there. I'm not sure if Dan is going to be here for the recap or not, but between he or I, one of us will be here. Thank you as always for watching. Thank you for trusting me and trusting Top Step with your funding opportunity. We are the original and the best, and we are looking forward to all of your success. Take your deep breath. Get out there. Patience, profit, protect. Perform, review, revise. It's all a process. We get through the process, find the one that works for us. We can succeed at this. I believe all of us are capable of doing so. Have a great trading day. It's Tuesday. I'll see you either Dan or I will see you on the recap this afternoon. Looking forward to a good trading day. Trade well, everybody, and we'll see you soon. Have a great day.